with Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark Wehner II, team leader here. Every Wednesday we jump on, talk about real estate going on in the Omaha metro area. Joining me today is Russ Williams with Williams Mortgage. So we just like to get on and get you in tune with what's going on. Quick tip today that we always start off the video with is jumping on our championsrealestateteam.com website. So I'll pull that up on here. So on there, there's many different resources out there. One of them that I'll highlight here. Let me figure out which Google Chrome. There we go. Get out of there. Look back here. So basically on our Champions Real Estate Team website, so when you go up on the top navigation bar, click on the buying side, basically bring it to our home buying side. So the one thing we have here is our home buyer's guide. So basically in there, you can click it and you don't have to log in or anything like that to get access to it. So it's free resource. Just says, a bunch of different items in there that basically pull up what to look for when you're buying a home. As it downloads here as it comes through. But just questionnaires just helping you navigate the home buying process. So what's all involved, the major steps, all that good thing. So it's a good resource for you to basically understand, like I said, the steps in the process, things you don't know what you don't know. And sometimes people are like, well, I don't want to talk with an agent because I don't want to waste their time because I don't know where I'm at, or I don't want to talk with a lender. Same kind of song and dance. But that's one of those things that if you're kind of in that phase, grab our home guide. We even have a seller guide as well. So if you go to the selling section has that there. But the best thing you can do is just educate yourself. If we can be part of that process and educating you, get a game plan together for you in that process. That's what we love to do here. From a coaching aspect of it, that's kind of how I look at it. That's how my brain functions, is coaching my clients, coaching my whether it's coaching athletics, coaching sports, anything like that, my background. But that's just the fun part about this business, is working with you guys, getting a game plan, getting a playbook together. What plays can you run? Whether you're buying a house, selling a house, investing in real estate, what makes sense for you, teaming up, surrounding yourself with coaches, be that a lender, a title company, home inspectors, if you look at a home warranty, insurance, homeowners insurance, anything like that you got to surround yourself with different coaches to put a good team together so that you have a good package in place so that you know exactly what you're doing. And it just takes a lot of that guesswork out, because I know it's, buying a home is one of the more stressful times in people's lives. Our goal is hopefully eliminate as much of that stress as possible so that you can just go into it making that educated decision, when you're buying a house. And there's a lot of those facets, whether buying or even building a house. Working with clients now to build a house. Just things I've seen in my, oh my gosh, I'm on 18 years now. I think this year will be my 18th year. But and you see those things that, hey, it doesn't matter to me what you put in your house or don't put in your house from a new construction standpoint. But here's things I've seen that my clients wish they would have done, or I built my own house, wish I would have done differently, because nothing's ever going to be perfect. But if you can kind of get some of that feedback from some of those different people, you can just take it, what you like, what you don't like, and make it your own. And all that good stuff. So sweet. Well, let's jump in here. What's going on in the real estate market over the last 7 days, as we like to do as well. So pull up the graphic here. So we had 539 new listings go live in the last 7 days, and 402 of them went off the market, essentially. Not exactly out of that group, but 400, 540 went on, 400 went off. So we're starting to see some decent activity. I know Russ will probably talk here in a minute or two about, the Federal Reserve just met today, about rates and stuff like that. So I think people are just the rates are what they are. They're kind of teetering at that 6%, go up a little bit, go down a little bit, but I think that's where we're kind of be, for the near future. And I think people are okay with that. And it's just, and some of the houses have been sitting just a little bit. Our months of inventory at the next slide you'll see is at 4.4. So we're still kind of in that neutral market, obviously different, price points, maybe in a different, buyer seller's market, neutral market aspect of it. But it's just, there's not that kind of uncertainty. I think over the last year or so, we kind of had that uncertainty. What are Feds going to do with rates? Are they going to go up? Or they teeter in the sevens? Now they're down in the sixes. And so I think we've kind of hovered in there, and in that little stall phase a little bit of where we're at. Obviously things global politically can happen, and then obviously things go all out the window. But for the most part, that's kind of what we're seeing. Obviously sold homes, kind of on par with this time of year. So nothing that we're seeing crazy, but that activity. Last week we had, so I mean, we've seen buyer activity pick up. I'm just looking at my notes here. Basically from the first week of January, was at 237 was our pending units, 336, 350, and now we're at 402. So we're starting to see it. Obviously that's just numbers, and that's trends that we're looking at of the buyers coming in. And basically our new listings that were the same things was that 580 820, 530, 530. So our inventory is kind of hovering around that 5 to 550 price point or 5 point units coming on. And then we're kind of our buyer activities coming up. And we'll start seeing, obviously, as the weather gets a little bit nicer. Obviously, we still know that February and March in the Omaha, Nebraska area can be crazy. You can have, a foot of snow, or you can have 60-degree weather. So, it's kind of a crapshoot. I think it was two years ago, we had a huge stint of just cold weather. And we saw that just looking at numbers that just dropped because people didn't want to go out and look at homes when it's frigid temperatures and things like that. So I kind of touched on the 30,000 foot view here, but I'll pull that graphic up. I know some people like to look at that. The press box view. So we had 3,544 homes in the Omaha and Lincoln area. We went under the 2,000 homes in the Omaha Metro, the Douglas-Sarpy County area. So 1929, one under 1,000 homes of existing homes. So that's not, I mean, we think of I think what this year we just went over the $1 million population mark in kind of the Omaha Metro area. And we have less than 1,000 homes of existing homes, that are available, less than 2,000 homes. So that's not a lot of homes that are out there on the market in that regard. So new construction 989, months inventories touched on that earlier. Average sold price at 370, so that is up 12% from this time last year. So that's cost of goods, that's new construction, just some of those things that we see there. So, that's just things I'll take in account of, sitting around waiting for rates to go down, but prices went up, 12% since last year. So, like I said, our goal is to give you as much information as possible to hopefully get you so you're comfortable making that decision when the timing is right for you. So we've talked about it before, not necessarily trying to time the market. It's, what's the best time for you? And we talked about when you're real estate investing, it's not timing the market, it's time in the market that matters. 10 years ago, it's, oh, I wish you had bought houses around COVID when it's, well, yeah, but, 10 years ago, now in 2036, are you going to be like, gosh, I wish I would have bought all the houses in 2026? So it's just a matter of when is the right time for you and all that good stuff. So let's jump in here with Russ. And I know that you said that the Feds met today, all that good stuff, and just kind of get a finger on the pulse of what's going on in the mortgage side. So how are we doing, Russ?
Not too bad, yes. Every 6 weeks, the Federal Reserve Bank meets in their open market committee meetings, and they vote on monetary policy moving forward. As was expected and as was forecast, they didn't make any movement today, although there were two voting members that did dissent that thought there should be a quarter point cut. The majority consensus was that inflation remains somewhat of a concern and that the jobs market is still strong enough that they didn't want to make any movement. Later on this afternoon, Chairman Powell will make comments. Sometimes those can be a little bit market moving, but nothing is really expected to change significantly. And if he would happen to say something that would be market moving, we are expecting any time now that we might hear the current administration in the White House name who they want to be the next Fed chairman to try to make Chairman Powell maybe a lame duck through the remainder of his term. So having said that, of course, the Fed affects short-term rates. That's going to be for things like auto loans, credit cards, student loans. But longer-term rates like mortgages are driven by consumer sentiment on where the economy is going and whether inflation or deflation is the talk of the day. So given that the Fed is still leaning towards inflation being a greater risk than softening or deflation, mortgage rates are expected to stay in this general range. Obviously, forecasts are never accurate. Nobody's got a crystal ball. But all the major players, Fannie Mae, Freddie Mac, the National Association of Realtors, Zillow, the Mortgage Bankers Association, Realtor.com, Wells Fargo, all the big players that analyze data ad nauseum are all forecasting mortgage rates to be in this general range for most of 2026. So for those of you that are planning on a lower rate later this year, certainly we hope that happens, but the forecast do not say that. So we'd encourage you, just as Mark pointed out, to get a game plan together with Mark and his team so you're not paying more for a home this time next year or late this year than what you'd have to pay today because home prices are still appreciating. So having said that, Mark, there are still subsidy monies out there for first-time home buyers. Folks can pay discount points to buy the rate down if they really do have a target rate in mind. But having that conversation and putting a plan together is the smart move.
Yeah. And I know some people in this time frame too are like, hey, well, we're going to save up, a couple more $1,000s to before we really want to make that step and things like that. Well, chatting with, with Russ and myself, we know that, for every $1,000 that you save, put in the savings account, is going to affect your monthly payment between $5 to $6 a month on a house payment. And so it's one of those, hey, I want to save an extra $5,000 to put towards a house. It's only going to save you 25 to 30 bucks a month on a house payment. And meanwhile, if you get in when there's less activity, that price isn't going to go up, and things of that sort. Same thing on the flip side. If that price goes up $5,000, now your payment just went up, 20, $30. And if you just waited to save that, you're kind of a net, so there's a lot of those different things that just having that information. I know that's when my wife and we decided to build our house. It's like, hey, we bought our lot, and we're like, well, let's wait a little bit. Let's save up a little bit more money. And then you kind of look at like what the cost of new construction was, cost of labor, cost of materials, and all this stuff. And you're like, goodness sakes, man, I don't know if we're gonna be able to offset that fast of an increase that we can our savings rate to get to where we wanted to be. And it's like, hey, let's pull the trigger before it gets more expensive, in that side. And ultimately, the timing has to be right for you. And that's just that conversation that she and I had, said, hey, timing's right for us to, to jump both feet in, and so and we can't, as agents or lenders, is know when that time is right for you. But at least if you have that information, you say, yeah, honey, should we try to save another 25, 30 bucks a month? And that's going to take us X amount more months to save that. Meanwhile, prices may be going up. Ultimately, like I said, we don't have a crystal ball. And for every 1% that rates go up or down, and Russ can probably attest to this, is that it's about a 10% difference in your purchasing power. So if that $300,000 house, all of a sudden the rates go up, you lose 30% of your what's your buckets, on there. And so, and then on the flip side, if it goes down, you can afford that 330 house. So, but anyways, that's kind of all I got. So I can go off on a long run. So, but hey, appreciate it. So if you have any questions, give us a holler. Russ at 290-8936 or myself, 672-7670, and we will see everybody